bracket high here, we had a bracket low here, and we can see that the high price was exactly where it should be. It was the perfect high price, wasn't it? That might have got you selling, but obviously that would all be dependent upon something very, very simple. A little bit of value coming in would have been nice, right? So we can see that that was the perfect sell zone for somebody who fancied a bit of macro value divergence. See how the big macro value divergence there? But there's a few little presses that would have been challenging, I think, for a few people to step into that market, especially if you're lacking in confidence in your overall trading scenarios. Then you might have just have said, don't know, not sure. Well, that's okay, because if you're not sure, you're not sure. It still doesn't mean that you can sit in the sidelines and not get involved if you get a perfect trade set up. And what happened, of course, was you then got the perfect trade set up. From the high price, we then put in a low of a bracket just there. There it is right there. There's the low of the bracket right there. From that price, we then have a half-back trade area, which is right there. From that price, we also have a seller coming in before that price happens. In other words, that sets up what we call the spring trade. So a seller comes in, not once, but twice, off the same price of 92.6. So sellers came in not once, but twice off of 92.6, and that sets up the spring if it were to break above. Now you can see as the price then breaks above, the value is actually declining, not rising. That is spring perfection, isn't it? That is spring perfection right there. And no wonder we got a fast money sell away from that price. It's probably all you guys piling in behind that top line sell for the tipping point, right? Absolutely, right? Right? Absolutely. So what happened next? Well, you can see what happened. As we come down into the 25, we get a little buyer coming in here. And from that buyer narrative, we can start to recognize the high probability that from that story, we may well be able to get a BSG squeeze if the price were to break against this next swing low here. And obviously there was a perfect example of a BSG squeeze there. And that was it, guys. That was it. That was it. Game over, right? So we went from a high price spring of 93s to a low price spring of, a low price level, sorry, of 86s. We made ourselves another $700 on the sell side, perfection right there off of a spring pullback. Now, obviously, you had to be on the 15-second chart to see this because it doesn't show up, for example, on your 1 minute chart. But obviously, on any pullbacks, as a rule, I generally go down a time frame anyway because I want to see the detail inside the pullbacks. It's not the same as a day high or a day low where you see it on a 1 minute chart, 5 minute chart, hourly chart even. On pullbacks, you want to drop your time frames. Does that make sense? Because you want to see the individual buys and sells. You want to see those short-term candles forming to see if there's any little levels that you can work with, any type of liquidity that you can work with on a short term. So the takeaway from that sell trade has been spectacular. Whether you got the top edge fade or not, the takeaway from that sell trade has been spectacular, to say the least. Now, obviously, when the trade does come in, what I like to do is I like to bring it back into structure so that we can start getting some more aggressive targets. We blow out the target, no problem there, pinned into the bottom edge, but I didn't want to close the trade. Why? Because, well, there seems to be a lot of value suggesting that the gold could be trading back down to as low as the prior lows here of 82s, right? So if I'm selling at 93s, 82s would represent just under $1,000 profit for me if the price were to break south again from this area. But does this trade make perfect sense to everybody? Is everybody happy that that trade there is the perfect example? That trade there is the perfect example of a halfback spring trade and BSG squeeze. Now, as I said, you can only see it if you go down into the 15-second chart. So if you were on the minute chart, you might have missed that opportunity. And that's unfortunate. That's the way it works sometimes, but it may be another lesson for people. They're on pullbacks to drop the time frame down a couple of time frames to see the detail inside those areas. Same as oil, See the detail inside those areas, just to get a couple of clues, because on the 15-second chart, the detail was in the trade, wasn't it? Because the detail was showing us this little level of liquidity here that we wouldn't have seen if we were on a 5-minute chart or a 10-minute chart, or even a 1-minute chart. It'd have been difficult to see that little break there, which was quite obviously a break to get that liquidity for the sell to work. And obviously from that break, you can see obviously the perfect, as I said, the perfect trade. And it really was the perfect spring trade at the halfback trade level, where the best spring trades are usually located. Now, we might be seeing a spring trade setting up again here, but it's obviously quite low in the water. This is going to be more like a BSG type squeeze, because we're nowhere near the halfback on this swing. There's the low price. The last high was up here, so the halfbacks are way up here. But it gives us an area to think about as a possible sell for a continuation. Now, as I said, looking at where the value is at the moment, I don't see any reason why the gold couldn't be targeting down into this 82 level in the next hour or so, or even the next half hour or so. So that's got another maybe $600 of potential sell side available for the short gold positions, yeah.